Good morning, traders, and a happy Monday out there to everyone. Hope that y'all had a good weekend there, and good Father's Day out there to the fathers and everything. And should be a nice week that we'll have lining up in front of us here. So, with that said, just going to also make note of a few items there on our economic calendar for today. We're fairly light in terms of any pressing data, but we do have the Empire State Manufacturing Index at 8:30 Eastern for the U.S. side of things. So we could get some gyrations off of that, but for the most part, we're nice and light on the data front today. So nothing too major to concern ourselves with there in the early morning session. And with that said, we'll be able to come over here and jump into our daily charts here on the S&Ps. And just before doing so, I'll put in a link from the CME there, just in terms of the volume from the contracts there, now shifting or rolling into the September series. Volume still alright in the June series, but just seeing volume slightly start to exceed there in the September series. So just to mention that there, so when we come into the charts, we have everything organized accordingly there. So with that being said, we'll take our daily chart, blow it up nice and large here. And one item that we'll want to note off the bat, as we know from where we closed on Friday, that we were able to close in balance, 3-bar balance mode on the close. Right, so just because our high on Friday was beneath the 2-day high and our low was above the 2-day low, so nice balancing act. And of course, so far we've kept it nice and contained in the Globex session. No major range expansion taking place as of yet. And then the other important item that we'd want to take into account is the nature of our persistency of trend, meaning our closes on one side of the daily 5 SMA. We've had our set of 3, 6, 7, 8, 9, and then 10, 11 on the close there from Friday. So working on the extended run, and we'll just want to note that we have been able to work ourselves into balance there as of Friday's close. So with that being said, just on the daily charts in and of themselves, we tested below and closed back above it on Friday. So we have two back-to-back doji bars. So 54.90 is where the daily 5 SMA comes into sight. So we're keeping ourselves slightly propped up above that zone. And then, as we'll look on the intraday charts in a moment, since we left it in the form of a tail there on Friday, good to note in case we work down towards that point at all, the 62.5 will be the previous day's low. But we'll see that in more detail on the intraday charts. But for our purposes for now, maintaining our highs, extended run to the upside, and just forming balance at the very tippy top of the swing. So that's kind of our departure area there for what we're working with in the S&Ps. And coming down here on the intraday display, this is a 120-minute visual. Just the way that we've been correcting this slow line here on that 310 oscillator, giving us that two-part wave on the consolidation. So we see when we push down off the highs, we had a little reading down in the oscillator. We came back up, put in a lower high, and proceed to put in yet one lower low. So this is giving our complex ABC correction, which leaves us with these two broader points as being, a little bit more major areas of interest. Of course, the top of the high test, that 19.5, and then more of the caution zone, right, that 62.50, the tail area from yesterday, would be viewed as a bit more of a caution zone there as far as what we have there in the ES. So maintaining themselves for now, and then once again, a level that comes in between these two broader points would indeed be that daily 5 SMA coming in at 54.90 there. So like the tone there, I think those two charts will serve well in conjuncture, the daily coupled with the 120-minute display. And we'll also take a quick hop over here to the DAX future for comparison purposes, since we did have a higher degree of range expansion on Friday's trading. It did come in the form of one PF3, two PF3s down, so at least the DAX has been keeping itself nice and behaved overnight, right? The consolidation and trading around the lower end of the previous day's bar. PD low there in the DAX from Friday is that 17,691. So I'd like to just make a quick adjustment here on this 120-minute and get that previous day's low marked off for us. So keeping ourselves slightly above that point, we're really just consolidating a notch. Where we had the broader damage that was done was accelerating on the other side of 18,240. So upon taking that out, we had greater degree of range expansion. So for now, just doing a little back and fill, consolidating around that previous day's low. Should we get above the overnight high, we'd have some more work carved out for ourselves. But if we drop this down even a notch lower to like an hourly or a 30-minute display, we can see what we'd be dealing with. We do have some overhead there in the DAX. So for now, short term, we could just say that they did a little bit of a job on holding that previous day's low just for the time being. So we'll leave that 30-minute display up though there in the case of the DAX. That time frame should serve us quite well going into our US morning session there. All right. And then moving on along here, we have our euro currency next in the queue. Also a group that had some better downdraft or selling pressure there in terms of its 2 days on Thursday and Friday of last week. Right, we were coming down in a relatively constructive format. In terms of the currency group, the EC had a little bit of a bigger response compared to what we had in the Aussie and the CD. But regardless, our 2 days of strong high to low, so we did leave a tail on Friday, so we closed up off of our lows. In terms of points of interest, the low that we had breached from or broke from was this bottom here, 1.07685. We're going to have that same level here on the 120-minute display, right, just previous cycle down there. So on the counter-reactive lift, we're moving towards that point, but would be viewing that as a bit of overhead, right, between the 76.85 rather, up to the 79.20 between these two broader points here, viewing that as some overhead that we'd be dealing with there in the euro currency. But we can also see where that ties in with that daily 5 SMA right in between those 2 points. So that's going to be that 120-minute display there with the euro currency. We could see the nature in which this oscillator is trying to correct off some loss of momentum or buy divergences that we had there on the settlement there from Friday. So it's again up off the low. Mild testing, so that's why we have an inside range bar in the Globex session. They held, they left a bit of a tail, so just slowly working their way up into what's going to be viewed as some overhead there in terms of that euro currency, but not a bad tone for it, and that as well as on that September series there for that euro currency. Alright, and then we have the gold. The gold being a tad more on the contained side in terms of a higher degree of bar overlap, meaning where these daily bars come in and overlap with each other. We did have a good showing on Friday. We had this nice range expansion up, but not quite enough to take out that 2-day high. So this blue box just indicating that we as well were in balancing act with the gold. So we gave it a nice shot to the upside. Couldn't quite take out the tail, so been just working on kind of trading back and forth a little bit on both sides of the 23.35 level. Coming into the intraday charts, we'll see a tad more detail. Of course, this zone up above is to be viewed as like low developed, right? So that's on the other side of 23.51, 23.58, which we're keeping ourselves well beneath. We could see that once again on Friday, right? We kept ourselves beneath the high tail, so we came in, gave it another thorough try, and just fell short. So what we're starting to do is coil up. We have the higher low, lower high, so small converging trend lines across these two broader points as we come in and try to balance with this gold. And along the way, we did a lot of work around it last week, so still like viewing the 23.35 as being a nice level of interest, simply because 1 data point, 2 data points around that level, coupled with, if we take that same zone on the daily charts here, here's those 2 lows, the 35 mark, 1, 2. So we traded around it, closed beneath it, closed up above it, and that's where we're trading here currently. So this 23.35 has been serving as a little bit of an over and under there in the case of the gold. So like utilizing that as well in the background, just a little bit more so on the daily as being an over and under zone there for the gold. But for now, that's what we're working with coming into the session on the 120-minute display. Nothing too major sticking out on the oscillator composition, just kind of trying to hold their own there. Since we did have a good advancement there on Friday, we'll also consider how this will look on the market profile visual, because we did have a steady markup, right, and a lot of this was done in the overnight session right before coming into our day session there on Friday. So we'll keep that in mind when we look at that market profile view there as well in the gold, but that's a little as to what we are working with on that side of things. Alright, and then as well here we have the crude seemingly getting a bit more volume in the August series. So the AUG having a tad more. So in terms of like its volume starting to get rolled into the August series. And just like how we have the link there for the ES, I'll drop you guys in the CME link for the crude there as well, just for good reference. Here with the crude, we've been working on trying to balance here as well. We had this nice advancement up off the low, bringing us back into the core of this previous broader range that we had. And as well, the crude was one of the few on Friday that maintained itself in balance. Right, so we left a tail, but not above the 2-day high. So maintain their own. How this looks on the hourlies or the 120-minute chart. The 120-minute shows it up a notch better. First of all, the way that we came back up to begin with, right? Nice impulse coming to the upside there that brought us into the zone, and we've been maintaining, right? We took some time. We did kind of that price equals time component, so did our balancing act and still faring all right. The high test from this structure comes in just in front of the 79 handle. 78.94 is that high test there in the crude, and then down below it's a nice visible zone here. 76.86 would definitely view that as being like a caution area for that at the crude. It's where we have the yellow line in case we fail to eat the tail, which we're doing all right on. But in case we fall short and put in any type of lower high structure, don't really have major concerns until the 76.86. Dropping beneath that point wouldn't be too constructive there for the crude. But for now, as we can see, we're maintaining and holding our own there. So we'll keep an eye there on the previous day's high for one, and then the high test from this whole structure, which is once again that 78.94 for it. So that is the crude, and then last but not least, we have these bonds here, right, which also had one admirable extension there on Friday, right, coming in and looking above that full high spike high on the 120 mark. Right, this one that we put in on the 7th of June, 119.31. So we looked above it there briefly and proceeded to not do a bad job on keeping themselves propped up. So we foraged a notch higher. And with these bonds now, depending on which time frame you're looking at, we'll start to see the way that the oscillator is starting to correct itself back down a notch. A bit more of a cleaner visual in terms of like a 1, 2, and 3 pushes up that we're now doing a little better job on working off here in the bonds. Plenty of areas of interest along the way. The more intermediate one here would be 119.14. That also ties in with fairly close to being where that 5 SMA on the daily chart comes into sight. So that's where we're leaving off there with that of the bonds. We can always come back and revisit those, but since we do have a small morning figure coming out here shortly, we'll want to let that settle in and see what we have lining up here for the day in front of us.